In sustainable investing, regulatory bodies are pivotal. They set the stage for standardization, transparency, and accountability, crucial in the burgeoning ESG, environmental, social, and governance sector. Their mission? Crafting regulatory frameworks and policies that shape sustainable investment practices. This involves defining ESG standards and ensuring that companies meet these criteria, a significant step in promoting ethical and sustainable business practices. A critical role they play is in combating greenwashing. By enforcing stringent standards, they ensure the company's sustainability claims are genuine, fostering trust and credibility in the sector. However, challenges abound. A significant one is the lack of uniform ESG measurement standards, a gap these bodies tirelessly work to bridge, striving for harmonization and adaptability. Their impact is undeniably profound. The rise in global sustainable investment, now exceeding $30 trillion, underscores their essential role in sculpting a sustainable financial future. They're the guardians of ethical investment, guiding us towards a greener, more responsible economy.
Mike, you wrote an opinion piece after the World Economic Forum in Davos. How can we make ESG investing real and meaningful?
Yeah, so I think we're in an interesting moment now because, especially here in Europe, governments are, especially through the European Union, beginning to look at a serious way of regulating global supply chains, technology companies, and the like. It goes by the name mandatory due diligence, and the European Union is about to finalize a requirement that will mean that all 27 member states need to set national laws. We're moving from a kind of voluntary system to a regulatory system. And again, especially in Europe, but the European model is going to basically come to dominate the world because so many American companies and others do business there. So I think it's a good thing. I don't think they quite know exactly what they're doing or how to do it, but it's going to change the discussion of ESG, which in my judgment has been too soft, especially on the S. It's going to make it real.
So a net positive, hopefully.
Yeah, I think absolutely. We have a long way to go. I think the Germans last year introduced a global supply chain law, and they recognize now that they've got to look at each industry. Each industry is different, but they've got to come up with standards and metrics, ways to evaluate performance, and then create some accountability. That's not going to happen overnight, but I think that we're clearly moving in a direction where companies are going to be under a lot more scrutiny in terms of how they actually carry out their social responsibilities, especially with regard to global supply chains.
Morgan, in your experience, what advice would you give to regulatory bodies to more effectively engage with and support impact investors in creating systemic change?
I'll note that in my work with Candide Group, we are generally working with accredited investors, and we, are working with family foundations who want their money working for justice, who are working across asset classes, and in general are sophisticated investors. And that the classic kind of accredited investor definition is that you have the sophistication to make great decisions for yourself. And I think that's where really allowing people to express their values, that it's almost as if the government were to come in and say, we think red doesn't look good on you. We're going to prohibit you from buying red clothing. It just is a pretty American thing to do in terms of the context of personal choice. So I also want to be clear that everyday investors can also make sophisticated choices, right? That this is not just about accredited versus non-accredited investors. But I think the idea that our dollar is our vote that we make every day. And that's whether I'm buying, the organic milk or the normal milk, or do I go all the way to the farmer's market? We get to make these decisions for ourselves because we're always kind of evaluating a basket of values in terms of what we're trying to achieve with our dollars. And it's that this is the vote that you get to make every day, as opposed to every 4 years of where am I spending my dollars? Where am I investing my dollars? and that we should have the ability to make those choices for ourselves, and that we also should, even as governing bodies, when I think about state pension funds or otherwise, that we are holistically trying to support the future of people. And that if you have great retirement savings but nowhere to breathe, that's not going to serve you very well, right? So really trying to think holistically of what are we trying to achieve, and also all the different ways that environment, social governance factors really enhance returns. So I think those twin elements to it of sometimes I think lately we've been throwing the baby out with the bathwater and ignoring the fact that you tend to have the opportunity to get outsized performance. In the context of ESG, be clear, I'm not offering any investment advice here. And at the same time, people need the ability to express their values in the way that makes sense to them. So I think that's the balance point you have to strike.
Carole, in the context of the clients that you serve, I know that greenwashing comes up a lot. What specific measures would you recommend to regulatory bodies that they implement to ensure that sustainability claims are both genuine and impactful?
Well, thank you, Andy. I think our journey here is not unlike the journey that investors were first faced with when we were determining financial rules, right? Back prior to regulation around financial reporting, there was a lot of conversation about it couldn't be done, it would be expensive to do, it wouldn't be consistent. And yet we found a way to do it with financial reporting. And I think it's going to be the same with sustainable disclosures, environmental and social data. We're certainly seeing that underway. And a lot of that is driven by demand. So, providing investors and stakeholders better information so they can better understand a company's plans and activities and how this company is positioned for the future is certainly a helpful tool to investors. It's a helpful tool to all the stakeholders of that company, their suppliers, their customers, their employees. And this increased disclosure, helps to improve that information landscape, and strengthen our ability to evaluate climate strategies, or as Michael, was talking about the social piece of a company's performance. So thinking about, their workforce disclosure. So I think we're seeing this global push, this global harmonization and increasing expectations across all stakeholders for these disclosures. At Domini, we help to support that by submitting public comments where we can when regulation is proposed, supporting, that decision useful information, increased disclosure on things that we consider to be material to investing. So, there are several SEC proposals out there related to climate disclosure, but we also have one on what's called human capital management disclosure. So things really tied to a company's workforce. Simple, you would think disclosure that's relatively straightforward. The number of employees, what's the total cost of the workforce, the turnover and workforce stability measures, and workforce demographic data. So, how they can attract and retain diverse talent. All of those things are meaningful to investors in helping to select, build better portfolios, select better companies, but also help us to align those portfolios with our investors seeking, we say, that triple bottom line. So seeking competitive financial returns alongside of universal human dignity and ecological sustainability, or more simply stated, triple P, people, planet, and profit. So I think, regulation will help strengthen the ESG data and disclosure. We're certainly excited with some of the proposals that we see coming out and are hopeful that it will have real impact.
Yeah, it sounds like the regulatory environment will constantly be evolving. And as investors, we need to pay attention and understand what that means to our underlying investments. Let's move to segment 2.